All right, so let me take a deep breath. And with that, let me introduce our very special featured guest for today. We have Amy Reischauer, Strategic Engagement Advisor for the SEC and this new Office of the Advocate for Small Business Capital Formation. And her job is to spearhead outreach and educational efforts. And prior to joining the office, Amy served as the lead advisor on capital formation matters to the chairman. Amy previously worked in the SEC's Office of Legislative and Intergovernmental Affairs, the Division of Corporate Finance's Office of Small Business Policy, and in disclosure operations for that division. We also have Courtney Hazley, Special Counsel, and Courtney joined the office in May of 2022 and brings experience advising companies on securities law issues, SEC compliance and disclosure matters, and capital raising transactions. So without further ado, please help me welcome Amy and Courtney to the Morning Huddle.
Thank you, Danilo. Thank you so much. So thanks for the introduction. I'm Courtney. Danilo already told you our really long office name, Office for the Advocate for Small Business Capital Formation. Along with the name, we have a really big mission, which is to serve folks like yourself. Before I dive into content, I do have to give the standard disclaimer that the views that Amy and I share are our own, and they don't necessarily reflect the views of the commission, the commissioners, or our colleagues on the staff. All right, so I want to kind of address out of the gate why we're here, who we are, and what do we do. And starting with that why, you're probably thinking, why is the SEC talking to a group of small business owners? I suspect a lot of you are self-funding or looking towards the kind of capital that Danilo was introducing at the beginning, right? Loans, small business loans and grants. Well, another way to fund your business is to raise capital from investors. And while that represents just like a small sliver of the overall funding pie, and while some of you might not have businesses that are ready in the life cycle to seek this kind of capital raising just yet, the long and short of it is that anytime you bring on investors or raise capital from investors, you're offering and selling securities. And the SEC, our agency, regulates all offers and sales of securities, even if it's from a private company, even if it's to just one person or your aunt in Ohio, right? So that's basically why we're here and why the SEC has either now or down the road some relevance and intersection with you and your business as you raise capital. Okay, so who are we? The SEC is huge. You probably have the sense that the SEC regulates big companies like Amazon and Google, and we're heavily involved in enforcement actions. And all of that is true. It's definitely a big part of what the agency does. But our office does something really unique and special. We were established by Congress specifically to address the unique challenges that are faced by small businesses and their investors. And when I say small businesses, that it's actually a pretty big range. It's everything from small startups, solo shops even, private companies, all the way to smaller public companies. And we also have a mandate from Congress and part of our passions on the team as well, to take a look at the challenges that are faced by minority and women-owned businesses and smaller businesses in rural communities, and also those affected by natural disasters. So that's our mission. But what do? We do three things: outreach and education, policy, and advocacy. I'd say on the outreach front, we engage with folks, groups all across the country. We get feedback about what their capital raising journey is like, what obstacles they're encountering. We share our educational resources, and we do events just like this one. On the policy front, we take a look at existing laws and try to get a sense for like what's working, where are friction points, what could be improved. And when new rulemaking comes down the pipeline, we review those as well with a view towards trying to help ensure that small business needs and voices are heard and reflected in those new rules that come to pass. And we also advocate. We go to Congress, we go to the commissioners, and we advocate for policy changes that will help small businesses raise capital. So I mentioned educational resources briefly. These are really the crown jewel of our office. And when we are out on the street, so to speak, engaging with folks, the thing that we hear repeatedly is, oh, I wish I knew more sooner about what it meant to raise capital from investors, what major pitfalls are. Charles, at the beginning, I thought this was really helpful. He mentioned just the complexity of the rules and regulations pertinent to his industry and how kind of overwhelming that can be, right? So much legalese and ambiguity and complexity. And that could not be more true of the federal securities laws. So part of what we try to do in our office and with our educational resources is unpack all of that and deliver to you kind of bite-sized digestible morsels to help you learn more about what it means to raise capital from investors. Having said all that, I think the best way to share our resources with you is to literally walk through some of them with you. So I'm going to turn it over to Amy. She's going to share her screen and give you some of our best highlights.
All right.
You, Courtney. And I wanted to just also leave that open in case anybody has a question or a comment. Please raise your hand and we'll pass you the mic at the earliest convenience. So thank you so much, Courtney. Amy, please take it away.
Yeah, sure. I'm getting a friendly little note that says you've disabled my screen sharing. Is there a way for you to allow me to share my screen? And while you play with that, I can certainly talk through. I love all the Zoom updates. We laugh at all of the technical issues we have. But I will share it as soon as I can.
You should have it, Amy. I made you co-host.
Perfect. There we go. Thank you. So I'm going to go to Chrome and I'm going to share. Did that work? Excellent. So all of our resources we've tried to make very accessible, and we mean accessible in that you can find them, you can get from one to another, and you can digest them, because as Courtney mentioned, the language is a little tough and concepts are a little complex in this area. And we don't want that to be an obstacle to businesses that are growing. So I have jumped straight to our capital raising hub. This is where you can find all of our resources. You can find it at sec.gov/capital raising. I think my colleague Jenny is going to drop these into the chat for us. You can also find it at sec.gov under the blue ribbon here under education. You can jump down to small business capital raising, but this is where you get to. I'm just going to highlight 3 of them, but as you can see scrolling down, there are many. And we try to break them down like we do all our resources into kind of the 100 level, 200 level, 300 level courses. So you can see we've got some just getting started. There's some continuing, getting a little bit of a deeper dive. And then down here, we've got some data and research if you really want to get into the data and the trends on what's happening in capital raising. The first tool I'm going to share is our Navigate Your Options. My husband likes to call this the Choose Your Own Adventure, but it's an interactive tool. It asks a series of questions about where you are, what's your business like, how much are you looking to raise, do you know your investors, and where you're gonna find those investors, because we know all of those are big kind of nuts to crack. I won't walk through every step of the way. I'll be like one of those morning talk shows where we have the pre-baked cake I'm going to pull right out. But let's pretend I answered all 7 questions. The meat of the tool is that it gives you this results page. And this results page is going to direct you to capital raising options that are more relevant based on the information that you gave the tool. So in this one, I said I was going to raise, up to $5 million. And, I didn't know who my investors were. So those are kind of the big things. And so it'll tell me, here's a couple of relevant pathways. And then here are some that might be less relevant, but we still want to tell you about them so you can kind of know what's out there on the landscape. For each of these, if you click on it, it'll take you to some more in-depth resources. I popped crowdfunding up here up top because I understand there's a little bit of interest there. For anyone who's not familiar with Reg crowdfunding, this is, I keep wanting to say relatively recent. It's been a while now, but we haven't aged a bit. But crowdfunding is an exemption that allows you to raise up to $5 million through a large variety of investors. They don't need to be what we call accredited. The one thing about crowdfunding, though, is it does have to go through a registered funding portal or a platform, and that acts as kind of a gateway. So as Courtney mentioned briefly, every time you offer securities, you either have to register it with the commission or you have to find an exemption. Exemptions look to find alternative ways to protect the investor and the business without going through the full-blown registered public offering. So in crowdfunding, that protection comes from using a platform as kind of a gateway. It helps provide the information to the investor. It processes the transactions through, for the business. So that's a little bit about Reg crowdfunding. I don't want to spend too much time on it, but feel free to dive deeper. There's more resources on all of these pages. I am going to jump back to our hub because there were two other things I wanted to show off real quick. One is I have probably already used a half a dozen terms that are not in everyone's, common parlance. There is a lot of jargon in capital raising, and I feel like there's nothing more critical in making sure that both sides of a conversation understand the words that they're using. So we have pulled together, we call it our Cutting Through the Jargon glossary. Like our hub, we break it down. I mean, you can look at everything all at once. If you're looking for a specific term, Amy just said something about accredited investor. I want to look that up. I got to remember what that means, or I got to learn what that means. We also have it in bite-sized kind of chapters. I'm just starting out. I just want to understand some basics of navigating capital formation. Here are some terms. Oh, look, there's accredited investor Amy just talked about. Amy mentioned something about an exempt offering. What's an exempt offering? Here you have just a very basic, we hope in plain language definition. And like everything I mentioned before, always trying to kind of get you a little bit of information and then give you a pathway to dig deeper if that's what you're looking for. So here you'll see you want to learn more, navigate your options. That's the tool I just showed, but there's also a deeper dive, some other information that you can kind of flesh out your understanding of what an exempt offering is. So that's our glossary. And then just one more tool, if I could find my way back to the hub, our building blocks. So this is maybe a slightly deeper dive than our glossary. I want to learn a little bit more about a concept that I keep coming across. These are sort of like a one-page overview or Cliff's Notes, if anybody remembers those. And again, you'll see a theme. You get you some kind of 100 level, maybe a little 200 level, and all the way down to later stage and public company resources. But let's stick to the top because it's easy. We've mentioned a number of times that we hear, why are you talking to me about investors? I'm still trying to deal with my line of credit, or I'm still trying to bootstrap with some revenues. The SSBCI program looked kind of interesting. Like when do I even know if I'm ready to look at capital from investors? So, we have a cute little acronym here, but it's just kind of a punch list of things to think about. So many people want to know more sooner. So this is just a way to think about, maybe I'm not there yet, but I might be someday. So what kinds of things should I have lined up? What should my documentation look like? So a little punch list. You want to have your financial statements. You want to know how much you need, what you're going to do with it. You got to understand that raising capital is really a full-time job on top of what I know y'all already have multiple full-time jobs with your businesses and, your life, heaven forbid. So just some suggestions for what to have lined up if you're thinking about raising capital from investors. So super quick, I'm going to look for the stop sharing here. Hang on one second. Oh, there we go. Stop sharing. So yeah, that was a super speedy tour of some of our resources, but just to kind of give you a flavor for what's out there if you want to go find them. I think Jenny dropped them all in the chat, but again, sec.gov/capital raising. And then if you are looking at the tools and you just have questions for us, we're always happy to chat. If you have questions today or down the road, you want to call us or shoot us an email later, our contact information is available on the hub, but you can get us at smallbusiness@sec.gov.
Thank you, Amy. And that's a perfect segue for opening it up for everybody. For any questions or comments that you have, please don't be shy. Just raise your hand and I will pass you the mic. I wanted to ask both of you, in your work and talking to small business owners and being in front of them, what do you feel are the top things they need to be aware of in order to understand the SEC, to understand capital formation, et cetera, et cetera? What are you seeing that they really need to, that we need to highlight for them?
I'll jump in if Courtney wants to give it a thought. I would say two things. One is that we are here. This office exists so that as you're exploring this and you have questions, please ask us, please, because the second thing I was going to raise is there's a complex regulatory framework out there that kicks in, I think, before a lot of business owners realize it does. And so I don't want to say that to be scary. We want to say that so we can educate folks so that they don't find themselves in a footfall. We want them to know what the rules are and how they can work with those rules to raise capital, because our goal is to have small businesses and their investors have good relationships, to have both of them be in a good place to use our capital markets to build those critical small businesses.
Right.
I'll pile on and I'll say the other two things I think about often that people need to be aware of are network and time. So when you decide, hey, you know what, I think I'm ready for this, I'm ready to raise capital from investors, you should know that that process will take time. And that process starts with having built, I don't want to give you a sense of months or years, but having built some significant time before you need the money, a network and relationship with investors where you've introduced yourselves, you've floated your business, they've bantered with you about, oh, you know, actually, I would want your business to be at this stage first before I look further. But can I introduce you to this friend who invests in businesses at an earlier stage? So just really building up that network. So even if right now your cash needs are, okay, more like grant, loan, that's fine, that makes sense. Those are easy. Not, I shouldn't say easy. Those are good ways to get cash sooner, and they totally make sense. But while you're doing that, I know you have a gazillion other things to do as entrepreneurs, but also be thinking about building that network of investors and angel investors, just building that out so it's there when you need it.
Right. Oh, excuse me. When do you know if you're ready? I mean, let's say you're doing some of that work and you know, you've laid some foundation. How do you know if in your business you're ready to start looking at, you know, really raising capital through investors?
I'll just say there's no one size fits all formula for that, and it's different for every person. And the cost of capital from investors, which is dilutive capital, versus a bank loan, which is non-dilutive, means different things. We've tried to answer that very question with one of the building blocks that Amy quickly showed. It's called capital. And if you just go through that mnemonic, it tries to pose common questions that you can ask yourself at various points in your business and start thinking through, where am I? How would I answer these questions? Where is my business vis-a-vis what these questions are asking? And it doesn't mean that anyway, it's open-ended, right? So the answers are different for different folks, but it's a place to start the conversation and to start thinking about what you would need to have lined up to be ready for a typical investor.
It's a big commitment, right? And it requires that you're ready to take the step, it sounds like. I heard a new term that I had never heard before in doing a little bit of research for this session. It was investimers. Have you guys heard that term?
I don't think I have, but I imagine it's to me, it's that idea that you have a customer that becomes loyal and they eventually want to invest in your business. And if I'm wrong about that, let me know.
That is it.
I think that it really that term kind of resonates with the concept that Courtney had raised earlier about networking, building out those relationships, because your customers may be some of those great relationships early on. They know your product or your service or whatever, and when it's time to expand, they might, they may have already drunk the Kool-Aid, right? They may already love that business and want to support it and want it to grow. So that idea that investors bring more than just capital, that network brings more than just investors, that network brings support, it brings guidance, it brings mentorship, it brings, hey, I did this once before and here was something that didn't work out for me, so maybe you should watch for that, or I did this before and this worked really well, or you should meet this person. So that everything we talked about when we first got on the call about community, that works in networking as well. So and when you're looking specifically at your investor network, again, you're going to be, hopefully you're finding investors who are bringing more than just dollars to the table for your business.
Right. I also learned that there's a bunch of platforms, well, not a bunch, I would say I saw at least 3 or 4 that are right here in Miami, that for equity crowdfunding. And these are platforms that you guys regulate, right? For equity crowdfunding? Yes.
So crowdfunding is that one exemption that I mentioned early on. It's up to $5 million and it has to run through a platform. And that platform, it can be a broker dealer, which is sort of a concept that's existed for a long time, or there's broker dealer light, if you will, a registered funding portal that was introduced as part of regulation crowdfunding when those rules were adopted. And so the funding platform is where they'll host the online portal to host the transaction. It's where the required disclosure that you have to make to investors for a crowdfunding offering, that will be housed on the platform. It allows you to communicate with potential investors on the platform. So it's it's a little bit of a built-in advisor mentorship role. Like a good platform acts as a good gateway, so that investors, have a sense of, okay, this is where I'm going to find information about if I want to invest in my local ice cream shop, and then the business can consolidate, that information to find investors who are interested in their ice cream shop.
Right. So I want to just let everybody know, and I see Ms. Janetta has a question, but don't be shy. If you have a question or a comment, we have a great opportunity here to learn about capital formation for small business owners. So I'm going to go to Janetta. Happy Friday, Janetta.
Happy Friday, guys. How are you?
Good. How are you?
Hi, Amy. I do have a question regarding crowdfunding versus like angel investors. Would it be best to do crowdfunding first, then to go through like angel investor or banking?
So, I hate to keep coming back to it. There's no one definitive answer. There's a difference if you have access to angel investors who are accredited investors. And I won't go into great detail, but there's a certain level of sophistication or ability to bear risk that makes an accredited investor. If you have accredited investors interested in investing, there are a few more exemption pathways you can use. There are a couple different ways you can structure an offering with accredited investors. If you don't have access to accredited investors, so you're looking at non-accredited investors, then there aren't as many pathways available. So you have to find an alternative. Crowdfunding is one alternative. So if you have a network of very happy customers, potential investors, as Danilo pointed out, crowdfunding might be an option for you because they don't have to be accredited. If you have an angel interested in you, that can involve fewer investors for a bigger dollar amount. So there's pros and cons, and it really depends on who's in your network and what you want to get from that investor relationship. I guess one other thing I would point out is oftentimes angel investors are bringing a little bit more guidance to the table, but the flip side of that is you may find that they're bringing a little more control to the table. Sometimes it's hard if it's been your business and your baby to take on advice from someone, right? So it's really all about where the founder is comfortable and what the relationship is that they want to have with their investors. Hopefully I did not answer your question altogether.
Yes, you did. So I also to add to that, would it be for us, the entrepreneur, should we have a plan basically to know like what we want from the investors?
Yeah, I think, sorry.
Okay.
I didn't mean to cut you off your question.
No, I was done.
Yeah. Okay. Yeah, I think that's really critical. I think it's good to be open-minded and to understand what investors can bring and what different investors can bring. I know it can be scary to let go of, a slice of ownership of your pride and joy in these businesses. But I think it's really important to get comfortable with what you really want your investors to bring. And where you might need help, right? What kinds of guidance or mentorship might you want from your investor? You might be the master at making something at plumbing franchises or something, and that inside and out, but maybe you're not as knowledgeable in some other aspect of the business. And an angel investor who's invested repeatedly might have that skill set and be able to bring that to the table. So those are the kinds of things, without giving legal advice or speaking for the commission, those are the kinds of things Amy Reischauer would think a business owner would want to think about as they're possibly leading towards taking on investors.
I'd pile on and I'd add that you should also think about the investors' expectations and how those align or misalign with your own expectations as you're going through that exercise. Because that'll help you when you bring on an investor. It's really like a long-term marriage, so it's harder than just paying off a loan. So you want to just really consider: is this the kind of person you want to be doing business, for lack of a better word, business with for a longer period of time?
Thank you, ladies.
Awesome. Thank you. Now, I want to remind everybody we're talking to Amy and Courtney from the Office of the Advocate for Small Business Capital Formation inside the Securities and Exchange Commission. It is a lot of words, right?
We're a mouthful.
Yes. So I had a question. At what point does an angel investor have to become accredited, or do they ever have to become accredited?
So, excuse me, angel investor is not a legally defined term, but it's definitely a commonly used term. Typically, angel investors are accredited. They're wealthy individuals who tend to invest, either on their own or with a syndicate, so with a, maybe there's like an investing group, that gets together and vets businesses. So angel investors tend to be accredited.
Right. So they have to go through the process of being registered with the SEC.
No, oh, I'm sorry. So an accredited investor isn't a registration process. It's the SEC doesn't weigh in and say, yes, Courtney, you're accredited. No, Amy, you are not. An accredited investor, it's a defined term. For individuals, it's based on either your income or net worth, income of $200,000 a year or $300 with a spouse or partner, or $1 million a year in net worth, not including the primary residence. I'm sorry, I'm getting a little legalese there. There are also some other sort of measures of sophistication that can qualify an individual as an accredited investor. Right now, it includes certain FINRA licenses, for example, will be a sort of a proxy for sophistication. And then once you meet any of those, you have to meet all three of the whole list of them. But if you qualify under any of those, you're accredited. And then again, that gives you access to investing in certain types of offerings that aren't available to non-accredited investors.
Right. Okay. So they tend to be higher net worth, higher earning individuals, right?
Exactly.
Right.
Exactly.
But they're not necessarily the moguls we hear about. They can have income of $200,000 a year and they become an accredited investor.
Right. And so, it's there's lots of discussion as to like how do you really quantify who is sophisticated enough and who can bear the risk. Could have a whole nother discussion on that. But generally speaking, they're in a position where they have a little more sophistication, or they have a little bit more income. As an investor, you still have to be careful, looking at those income levels, or, that Series 7 license or whatever got you to be an accredited investor. You're not bulletproof, right? So there's still protections even for accredited investors, and there's still information that investors want to look out for. It's not a total suit of armor, but it does get you a little bit of protection. Got it.
Can a solopreneur, and I have a lot of questions because this is such an interesting topic. Can a solopreneur realistically seek to become involved in capital formation, either through any of the pathways? Equity crowdfunding, I always understood it as a way for the small businesses to have some access to this type of capital formation. Can a solopreneur participate?
Yeah, so there's the exemption pathways don't always distinguish what kind of company can raise money that way. I hedge that a little bit because I don't want to get into too many of these. Certain funds can't rely on certain exemptions to raise money to be a fund and then turn around and invest in something else. But we'll just put a pin in that. But generally speaking, an operating company has a number of alternatives for how they could raise capital, whether that's crowdfunding or a private placement with accredited investors. But again, the specifics for each, we call them pathways, each exemption vary a little bit. And one thing that I should reiterate is our goal with all of these tools, and just even the information we're giving on a call like this, is to just give you some ways to do a little homework before engaging counsel. I hate to end the story with go get a lawyer, but maybe use some of these tools to empower yourself so that by the time you go to reach out and engage counsel and advisors, you know what questions you're asking, you've narrowed down your potential pathway, you come armed with a little bit of information, so you're not engaging counsel to then, pay them a ton of money just to teach you the securities laws, right? You've at least narrowed down where you think you might want to go.
Right. And an attorney is an important part of the team that you're building, either whatever depth of relationship you have with that attorney and engagement with that attorney. We should all have access to that as a small business owner, right? Because they're a valuable part of the team. I see Krishana has her hand up. Krishana?
Yeah, Amy, Courtney. So this is a perfect segue into my question. So a lot of small business owners are learning to be legally responsible and responsive to the communities that they're catering to or they're operating in. On the platform that you shared today, what tiles would you recommend that they kind of take a deep dive in for personal research to understand legal jargon, understand what compliance is and regulation? Do you guys have any recommendations from your side on what tiles they should look at? Thank you.
Courtney, you turned yellow. Your box turned yellow before mine. So if you had a thought, feel free to jump in.
Yeah, sure. I guess I would. I would start by explaining that. Yeah, I know. I would start by explaining that our resources in terms of like legal compliance are going to address only like the legal compliance issues attendant to having raised capital from investors. So if you're thinking about the fact that you might be a solo entrepreneur or founder learning to navigate more general like consumer product liability and other employment related liability, that will live on outside of our educational resources. Did I misunderstand the question, or do you think that's what you meant?
It's there. I was just asking for what on the tiles on the webpage would you recommend? So I see glossary of terms. I see rules, making video gallery that could potentially.
I see what you mean. Yeah. So I would start with I'm turning to my hub so I can be looking at it with you here. Hang on one second. I would start with probably the glossary just to get a sense of some of the language. I think under the building blocks, those first few, I think are very helpful. There's one on what does the SEC have to do with my private company? I think that's a great start. It kind of gives what Courtney shared with this group. Who are we? What is, why do I care about the SEC? When should I care about the SEC? I think that's a pretty good place to start. So between capital, what does the SEC have to do with my private company?
Further down, there's also a building block on what happens if I don't comply with the federal securities laws. And so that will get you what if I did an offer or sale of securities and I did something wrong? What do I need to worry about? That will start to address the answer to that question with a bunch of embedded links to find even more answers, depending on how fulsome the question is.
Okay, fantastic. Thank you. That answered the question, right, Krishana?
Absolutely. Thank you so much.
Awesome. I want to go to George. He has an interesting question. George, did you want to chime in or do you want me to read it?
Yes, my question is, I have been in Orlando 2 days ago for the American Rental Association. It's a association for all the rental companies. And I have been speaking with a person that he is raising money for an investor in using one online platform. Is a Seed or SR. It's in UK, this one specifically.
Seed Invest.
Yeah, but he sent me this link that I share right now. Seed Invest he told me, because we had a Zoom call this morning, and he told me that this one is similar, but not for the UK. This one is specifically for the US market. Mm-hmm. So he said that he's a very good way. He's getting a lot of money from micro investor. I think the minimum is $100 for investor. And because it's difficult, I have an online platform after 23 years in the equipment business, and it's difficult for me to find investor because we don't know who is coming to get your idea. So if you put an NDA, for example, to protect your idea, your business, they don't want to sign the NDA, and you say, well, what can I do? Is I am coming with the NDA is good. I'm protecting my business, but so we don't have information about this. And thank you for this. Very good. I think this is one of the best calls, especially for me. And thank you. And I would like to hear your opinion. Thank you.
Yeah, so we aren't going to be able to like weigh in and say this particular platform is good or reputable and this one is not. But so many of the issues you raise, protecting your IP, these are exactly the right thoughts and questions that one has to work through when they're taking on investors. And again, understanding that relationship with investors that Courtney and I have talked about, and knowing what they're bringing to the table, knowing what you're bringing to the table. So unfortunately, I'm going to say those are really great questions. I don't have answers to all of them. But one thing I will say is Seed Invest is one of many platforms. There are platforms for regulation crowdfunding. Platforms will also often offer to help with transactions under other exemptions as well, whether it's 506C is sort of an accredited investor crowdfunding opportunity. Reg A is like a mini IPO. I don't mean to go into all of those, but there are a number, even within some platforms, there are different exemption options. But if you are looking for a platform to conduct a crowdfunding offering, they have to be registered with the SEC. I'm going to put my colleague Jenny on the spot because I didn't get a chance to look up the link. You can go to FINRA, which is the organization that that tracks the funding portals, to check and see if a particular portal is registered. So Jenny on the chat, I'm not sure if you're able to find that link quickly enough, but we can certainly share it with Danilo and he can make it available. It's also available in some of our crowdfunding resources if you want to look up who the registered funding portals are. So sorry to not answer, but they are great questions. They're exactly the kinds of things you need to be thinking through when you're thinking about whether to bring on investors and who those investors should be.
Wow, thank you so much for that. I also wanted to ask you, is there a minimum for the going back to equity crowdfunding or reg crowdfunding? Is there a minimum amount? Does the SEC apply a minimum amount for it to be an exemption?
So there are not minimums imposed by our rules. There are some exemptions impose maximums for certain investors. Sometimes the investment that an individual can make is limited by their income or net worth. You see some familiar themes. It's kind of similar to an accredited investor. Oftentimes accredited investors are not going to be subject to the same kind of limits as non-accredited investors are going to be. So the SEC doesn't impose a minimum. Also doesn't impose a minimum offering amount. Some offering exemptions impose a maximum offering amount, but there are no minimums. If there's a minimum, it's something imposed by the company. It's just saying, I'm not willing to take on a $15 investor. I really need to talk to folks who can write a check of, whatever their dollar amount is. That's going to be a negotiated point.
Right. Can we come up with some possible case stories or for raising capital that just popped to mind? There's one in particular. Let's say that I am leasing space. I have a small business of whatever nature, and I'm leasing space in a plaza. And let's say that the owner of the plaza is retiring and wants to sell the plaza. And I would like to buy the plaza so that it's part of my company now, right? I'm not just leasing, I'm buying the whole building. Mm-hmm. Could I then go down either the reg crowdfunding option to raise and maybe even get some investors, right? Mm-hmm. To participate, get the community to participate so that we can, uplift this plaza that's been in our community but hasn't been owned by the community, let's say in decades. Is that possible? Is that something that can be done through what the SEC oversees?
So that is a great question. And I'm going to give it one of my now patented non-answers, I'm afraid. But the one thing to know about the SEC and our regulations is we are not what one calls a merit regulator. We don't weigh in on the quality of the business, what the business is doing, what you're going to do with the proceeds of your offering. That is kind of between you and your investors. So our rules are focused on whether you're raising a security, whether you're issuing a security, excuse me. Sometimes it depends what kind of security that is, equity, debt, or something else. Some exemptions are limited to truly equity or debt. So the type of security may affect what exemption you can use. Who you're raising it from is going to affect how you can raise capital. But what you're going to do with that, with those proceeds, is something, one, you're going to need in order to entice your investors to come on board, because no one's going to write you a blank check except maybe your mom. And so, that's all part of the getting ready for the investment. But the SEC is not going to weigh in on, what you're doing with funds.
Right.
We might get concerned if you lie about what you're doing with your funds, but
Right.
that's because the anti-fraud provisions apply to anything,
Right.
whether it's an exempt offering or a registered offering.
That's interesting. Okay, great. Thank you so much for that. I wanted to ask you, I think we're coming on the end of the hour, and I want to just give a last call for anybody that has a question or comment. This is your chance, guys. Please don't be shy. How revolutionary? Yes, is there somebody that has a
Yes.
question?
Good
Please
morning.
go ahead.
My name is Donna. My company is Servant Delights. I'm glad to be on the call. Regarding the investment, is the interest rate is there interest rate, and is it comparable to the banks or competitive to the banks?
So, what that gets to is, what is a security? I know you probably don't realize that's the question you're asking, but I'm going to answer it that way. So there may be a security that is a debt security. There can also be just a straight equity security, and there can be kind of hybrids in between. So if you're just issuing common stock, there's no interest rate per se. You're just issuing kind of an ownership slice in your business, and then whatever happens to that business, that's going to be the return on that investor's investment. If you have a debt security, you may have a stated interest rate, and it's going to be negotiated between you and the investor. Some find that if they aren't able to get the terms that they need from a bank, they may pursue a securities offering. It really depends on what the company is looking for and what the investor is willing to take on. The other thing you may find, if you're doing, some folks may do a convertible debt offering or a convertible note, which may be terms that you've heard before. If you haven't heard them, all these terms are in the glossary I pointed out earlier. But with a convertible security like that, it may, the terms are going to vary because it's all negotiated, but it might be like, hey, Donna, I'll give you $100. You can either pay me back 10% interest in a year and a half, or you can convert it to equity in a year and a half, and then I'll own 5% of your company. So it really is kind of up to what the investor and the business negotiate.
Donna, did that answer your question?
Yes, it
So-
went into a lot more detail for me to understand. Thank you so
Right.
much.
Yeah, this is exciting because now your company can issue a security to investors, and there's different avenues for it. That's why that tool that was shared earlier is so important. And would you ladies mind putting it again? Because I think some folks came in a little later, so the chat box doesn't show up for them with all the
Sure.
details. Yeah. Can you set this in context of historically? I remember reading Shoe Dog. I don't know if you guys read the book. It's the story of Nike. And great book. And one of the things, Nike was formed in the late 60s and 70s, early 70s. And one of the lamentations in the book and telling the story was just how hard it was back in those days to access capital. Can you give us like the historical arc of now there's so many ways to access capital and to form capital? Can you kind of set that in perspective? I mean, am I reading that right, or what do you think?
No, that's that's a great question. I feel like law students should have you grill them with these questions. They're good. But just to put things in a very, very high level, the SEC was formed after the crash in the 20s, and after 29, they decided we need some guardrails here. The Securities Act in 33 basically regulates offerings, and then the 34 Act a year later, the Securities and Exchange Act, that came in and started regulating sort of the companies that are issuing them and the people who are helping to trade them. So that's sort of where it started. It's always been kind of a disclosure-based regime. So long as you are telling people enough information and truthful information, about the material, which is a very magic legalese word, but about the really important fundamental aspects of an offering, that's what the SEC is worried about. Every offer and sale has to be registered, which has a very fulsome amount of information that you share with your investors, unless there is an exemption. Early on, the exemptions were really statutory and kind of broad. And the primary one that folks would use if they didn't want to do a registered offering was what's called a private placement. For anyone that does like citations, it's now called a 4A2, but it's a private placement to sophisticated investors. People were sort of guessing what the statute meant for 50 years. And they were, had developed what we kind of, like practices as to what was a private placement. But people like certainty. People ask these questions. They're tired of Amy's non-answers. They want to be able to check some boxes. And so the SEC came up with a safe harbor, which is now called 506B. And that is where, look, if you do A, B, C, and D, and you don't do E, F, and G, those don't actually map to citations. That was just illustrative. Then this is a safe harbor. If you meet these requirements, this is going to be a private placement. So that was in the 80s. Made things a little easier, but it was still limited. You were still looking at accredited investors. You were still looking at not generally soliciting, keeping those offerings private. So if you didn't have a network available, or you didn't have a network of people with sufficient funds available, then you were a little bit flailing. Nike had 506B, but if they didn't have accredited investors in their network, it could be tough. So then fast forward again to 2012 and the Jobs Act. This was, the tail end of the Obama administration, a bipartisan adopted law created additional exemptions because we found that there were some gaps. There were businesses that weren't able to raise funds given what we had. So the Jobs Act opened up a few more things. It opened up regulation crowdfunding. It expanded Regulation A. Again, feel free to scroll through the glossary and learn more about these. I want to try and just give the high level historic approach. So it opened up some more pathways. If you think about it, now there's lots of pathways with lots of different requirements, and you might be able to find your sweet spot, but you also have to figure out what all those rules are, and that layering in of rules over decades has made it really complicated to understand exactly what that framework is. So the upside is there are a few more pathways. The downside is it's very complicated and you have to distinguish one pathway from another. And another downside is you may still not find exactly the Goldilocks way to raise capital. So you want to be careful, and you got to figure out, what can I comply with? Where can I find my investors? So I tried to make that quick, but hopefully that kind of gives at least a little bit of a historic timeline as to where we started from and how we got to where we are today and why.
Wow, Amy, thank you. You get an A. So, well, thank you so much. I want to be respectful of everybody's time. I know you're busy. And George had a quick question it's kind of a good endpoint of, is there support? We know the website, the glossary, and the great tools you guys are building for small business owners. We have them now in our arsenal. Is there one-on-one assistance? Is there a phone number? Is there like support, or it doesn't work that way? How does it work?
So we can't give legal advice, but we can certainly direct you to the right resources and the right rules. And we are happy to respond by email at smallbusiness@sec.gov. And I unfortunately don't know our phone number off the top of my head, but you can find all of our contact information on our office website, which is at sec.gov/OASB. That's the Office of the Advocate for Small Business. And then we dropped the capital formation just to keep it short.
And the SEC also can provide interpretive advice. If you're struggling with particular exemptions, pathways, you have a scenario, you think X, but you're not sure. We can't answer those interpretive questions, but if you're not sure who to go to, we can certainly play traffic cop, and you can still come to us and we can point you in the right direction, because the agency is massive and it can be overwhelming to try to figure out who to connect with.
Fantastic. So George, that answers your question. Thank you so much. Amy, Courtney, any last words, any advice, any guidance, any observations that you have for the small business owners on the call?
I suppose if I could leave you with one parting thought, it would be, we want to hear from you. So hopefully we've demystified anything about the SEC being big and scary. We're really friendly. We're here to help as much as we can, facilitate things, and also expand our educational resources. So if you're finding that you're hitting a challenge or a problem, or you come upon phrases or scenarios quickly and we don't have resources that address those, and you think they might be really great for the small business community, please reach out to us and tell us. A lot of the ideas and building blocks that are on our website right now were born first from the idea of someone like you in the community that said, you know, it would be really great if I knew how to approach X or Y. So don't be strangers.
Great.
Yeah,
Amy,
what she
anything you
said.
wanted to add?
What she said, 100%.
All right, great. Well, let's give them a big round of applause, guys. A big warm thank you from the Huddle community here for keeping us in the loop and informed about the role that SEC is playing, the new office, or it's not a new office. I think it's relatively new, right?
Relatively. We stood up in 2019. So
2019, right. So the Office of the Advocate for Small Business Capital Formation, they have some great tools online that try to demystify these new pathways for small business owners to raise capital, but you have to be ready. You have to be informed. There's a lot of rules. And I think that's one of the key takeaways, right? There are new opportunities, but you have to stay informed about how to leverage them. So with that, thank you, ladies, so much. I really appreciate you sharing this information with us. Please come back anytime. If you have any good news to share, any updates, you're always welcome and you're part of our community.
awesome. Thank you so much.
Thank you.
Thank you so much. Thank you, everyone, for joining us. We did it again, another great informative session, and we'll do it again next Friday. I want to thank all of you for being such a great part of the Morning Huddle.